Hello, Internet friend. Today on Value Side, OpenAI, China's challenge to big tech. I'm David Ravel. Well, for months now, Wall Street has lived on the hopes and aspirations of a new technology, artificial intelligence. AI promised to take these highly profitable companies to the next level. The Big Six were already the most valuable financial assets on the globe. 3 were valued at over $1 trillion, NVIDIA, Apple, and Microsoft. 2 are over $2 trillion, Amazon and Google Alphabet. And the low-priced company, Meta, is over $1 trillion. Now keep in mind that it's only been with a little more than a year that any company had a market value of over $1 trillion. And yet here are 6, all over that benchmark $1 trillion. The promise of AI was that these high-tech giants would leverage their new capabilities to even greater heights. It was just the sort of vision that Wall Street relishes, a future of greater and greater profits. Of course, there were some details that needed to be worked out before this nirvana would be realized, namely, how to profit from AI's superior capabilities. This has been the one overarching issue with most of the Internet. You see it with many of the major newspapers and magazines as they sought to go online. Papers like the New York Times and Wall Street Journal are only available to paying subscribers. Well, no worries, thought the Big Six. We'll just follow the subscription model, charging customers for exclusive access to our AI. Certainly everyone will want this incredible product. And up to this point, that's been the case. Look at the astute way in which Microsoft transformed the open-source, not-for-profit OpenAI into a newly reorganized, as of 2019, OpenAI Global. Microsoft, one of the most profitable companies in existence and a major player in the trillion-dollar club, had solved the open-source issue. With Microsoft in the lead, the rest of the Big Six would follow the subscriber model to unlimited profitability. Wall Street understood this, and for months has charged into the AI revolution. Analysts have spent hours multiplying future earnings into a higher and higher stock market. That is, until today. Over the weekend, China introduced DeepSeek R1, its all-new AI product. Expert computer technicians tell us that DeepSeek R1 is at least as capable as ChatGPT. But that's not the real issue. What's at stake here is that DeepSeek R1 is entirely open-sourced. There's no charge at all for using it, and anyone around the world can use DeepSeek. And loud boom you hear from Northern California is the hopes of trillions in unrealized profits suddenly gone out the window. If there is one thing that Silicon Valley is allergic to, it's open source. In one fell swoop, China has just exploded the incoming stream that was designed to last for a generation. Gone are the profits, gone are the countless future subscribers, and gone are the Big Six's future revenue. This is a watershed moment, something that only comes around very rarely. Today you're seeing both Wall Street and Silicon Valley caught completely off guard, sideswiped by a novel new approach from a Chinese source most did not even think was in the game. A most unpleasant surprise that's likely to affect the nation's financial markets for weeks, if not months to come. China's open source has shaken the Big Six and Wall Street to their very core. And that's today's Value Side. For all of our articles, references, and podcasts, visit valueside.com. I'm David Ravel. ValueSide is independently written and researched. The views expressed are strictly my own.